I trust you are all well. I'm just not in my usual trading spot, so happy to. We're gonna carry on with the show, but I'm gonna switch off my video just to respect the people that are behind me. But we will carry on with our show. So presently, I'm in a few trades. I'm in a German 30 trade, sold off here. In a couple of trades on the UK 100, sold off here and sold here. And in a trade in the S&P 500. So I'm looking to see if there will be an opportunity to add in or to get a trade on the Hang Seng 50. Market is just opened. So what I want to do is we will get back and look at these charts at some point, the ones that are live and presently moving in our direction. But I'm just would like to talk a little bit about the Hang Seng 50 and what I'm looking to do and why I am looking to go short in this market. So, because this candle is moving in our direction, I'll just start off there, but there's a lot more to discuss that's taken place earlier on. Right now, we're coming out of a convergent triangle. And the convergent triangle is just simply where you see the market converging into a particular point. I mean, if you were to extend these lines, I mean, you can logically tell that the market is not going to continue putting inside candles until it's just a solid line. That doesn't happen in any market. So whenever we see a converging triangle, in terms of price action trading, we expect there to be a breakout of the converging triangle, and the breakout usually fails. So if you break down to the low, at some point, no matter how far it goes, the usual is a failure, which comes back to the apex. If we break to the upside, we expect that breakout to fail, come back to the apex. So presently, with the bull breakout. Now, this market is interesting, and I really enjoy trading it for the simple reason that it has during the day 3 distinct openings. So there's the open of the day, then somewhere within here, the market closes at 6 p.m. my time, which is 6 a.m. my time, which is 12 noon Sing, and opens an hour later. Then it closes again at 10:30 a.m. Plus 6 hours, so 16:30, opens after 45 minutes. So it's just opened again. So these gap ups and these opportunities really give us opportunities to jump into the market. I treat every open as news, and I like to mark it. So let's just mark that. The reason I treat it as news is that usually, like now, we had a gap up, the market closed on this low and gapped up. Gap up could have been there. I've seen some pretty dramatic gap ups. Okay, the reason that I put that in is that if there's any, well, I treat it the same way as I treat red news. 95% of the times I like to wait until the opening candle is closed plus a few more. Sometimes I jump in when I assess that I think there's a high probability that will go on the direction of the open candle, but I can tell you that sometimes it's about 5% of the times. Most of the times I have to manage my trade pretty strictly. So now we have a failed breakout and the market is coming into this apex. Before I trade it, because we broke out. These were bull candles. We've come back to test the low of the breakout candle. We've also come back at the moving average. Moving average is not so important in a trading range because they tend to be flat, but it exists nonetheless. What I want to see is a bit of follow through from the bears. So they may follow through. I know the bears are strong, and there will be a pullback of sorts, and then we jump in. Now, that's a higher probability that I'm looking for. In the event that the market keeps sells off strong bear candle and there is no pullback, now I'll have to sell at the market. My initial stop at the moment, I'm thinking of putting the stop here. Okay, that's where I'd like to put the stop. So I'll wait a little bit and see what happens with the next candle, but I'm definitely looking to go short here. Why wouldn't you just sell? You can, because your stop is here. You can do that. You know, there's absolutely no reason not to just sell and put your stop here and rely on the stop. But I'm just, by waiting, I'm just trying to increase the probabilities in my favor, to push more the probabilities in my favor, my probability of success. So here is an example of what took place. I mean, this market, just looking back at what happened since morning, has been quite fascinating. If you look here, so this candle was the open of the UK markets. Let me just see. Okay, and that candle was open of the second session. I'm just going to mark it for us so that we have it in our sites. And so that was open of the second session, open of the third session, open of the UK markets, and then of course the open of the day is up here. Now, if you ever look at the open of the day, and this is something that's interesting about price action, sometimes when you get distinct patterns at the open, they tend to repeat themselves throughout the day. So right here, that was a converging triangle at the open. Inside candle, inside the opening candle. And then we had a bear candle, just ticked a little bit outside of the low of that. But if you look at that whole pattern, that was an inside candle. Now, if you really analyze it, we tried to break beneath the low. The second candle failed, went up and came back. So this whole pattern is a breakout mode. It's a convergent triangle. So if you'd seen that, then you have two options: wait for the breakout and the pullback and look to jump in. Now, higher probability the pullback comes back to the apex, but we didn't have that here, which points to us if we have to do it's easy to analyze charts, if I may say, after the market has moved, but as it's unfolding before you, you quickly diagnose, oh, okay, I've got a convergent triangle, breakout mode right at the open. So that's good. Inside candle bear, second candle, third candle is also bearish. Then I've got to look at the next candle and see if I'll get a failure. But look at that candle. That's a beautiful breakout candle. Broke out of the convergent triangle, broke beneath the low of the convergent triangle, broke beneath the low of the last candle of yesterday's US session, broke beneath that potential double bottom. So that's a strong breakout. That pullback is sufficient for us to say, well, let's jump into the trade. Now, if you do that, then your stop still has to be up here. Now, I have $100 kind of limit on my, that's 68. So I'll wait a little bit. I may not get it, but I'm hoping to get just a little pullback, even in one candle, then we can jump in. We're coming into the apex, so I expect breakout pullback to come to the apex. Okay, so that's expected. Now, out of that breakout, if I get a pullback and a reversal, then I'm happy to take that trade. I'm talking about this. Let's just see if there's any other opportunity to add into the other trades. No, there's nothing. So presently, there's a trade sell on the S&P 500. Sold at that level. I got a stop somewhere up there. Measured move way up there. I'm not going to scale in at the moment. If we're able to get another huge candle and then a pullback and the 10 EMA will be accelerating down, then I will look to add in. At the moment, I'm just going to leave it. It could still go back into that trading range. So there's no need for us to rush and do anything. Just hold on to the trades. A couple of trades here. Again, same thing. Stop is a huge stop, which is almost above the highs of the day. Because I expect, when I was taking the trades, I expected a deeper pullback to test the open of the day. So I'm going to leave the stop there for now. Later on, I'll see if we get follow through selling and we pull back and start to test the 10 EMA as it descends, then I'll add on to those trades. What's the other one? The other one is German 30. Okay, so that's up here, and we've had some good selling since took that trade, so that's fantastic. So I'm going to keep watching to see if as the 10 EMA comes down, we get a test of the 10 EMA and it descent enough reversal. If I do get that, then I'll jump into the trade. If I don't get any setup, I'm just going to wait and see if any point, the market breaks beneath this or we still track back. So a couple of times, many times, in past sessions, I've said, well, if you take a trade here, your stop is well out there. That's exactly, there's nowhere else to put my stop here because there's no pullback. If you take a trade here for any reason and you say, well, there's like 2, 4, 6 bear candles, let me just put it here because that's a nice place. Market can pull back, stop you out, and then carry on your way. And, that can be quite frustrating. So we're just going to leave those trades as they are and do nothing and just rely on the stop and see what we get. Okay, so in terms of the pattern, and ticking off the pattern, I'll be saying, okay, triangle, breakout, pullback. So far I'm ticking the stuff and everything's kind of going away. It is a lower high. But it just hasn't ticked all the mental boxes that I need to tick before I jump into that trade. Again, as I think I've mentioned many times before, if you miss a trade, that is perfectly fine. The trade is gone, you've missed it. There is nothing to stress or worry about. Right now we've got 40 seconds for it to close. There's a problem for me with this particular candle because if it closes as a bear candle on its low without taking this low out, then it's a dodgy candle, which creates a 2-bar trading range, in which case I need to wait for the breakout and the retest. Okay, if it closes a bull candle, well, I need those bulls to try and accelerate up and hopefully fail with a double top somewhere here, and then we can sell. So we just have to wait and see. So I was talking about this. So that's where you could have taken that trade. But again, your stop would need to be above this whole pattern. Okay. Alternatively, if you'd waited to say, okay, I've seen that, I want to see if we get back to the apex, then you get a follow-through candle like that. And you say, oh man, the bears are selling off and I am not in the trade. What am I going to do? Well, you wait. Then you see a tail at the bottom. And you still leave a body at the top. Now, in your mind, you have to interpret what is happening from a price action perspective. And this is what I enjoy about price action. It really gets you to think and interpret and understand and analyze what the market is doing in front of you. That tail suffices as a pullback we're looking for to get to the apex. Because here the market went down and came back. Okay, that's a short pullback, small pullback within a tail. Then we had a huge sell-off. So at some point, this was a bear candle in its entirety. But then that bear candle had a tail, and that tail means there was buyers at the bottom of the candle. And that's enough as a pullback. So having seen that, you can put your, let's put it in. So it depends how quick you are to press the button. If you're able to process your orders pretty quickly, then place orders in the market. I do that quite a few times. But sometimes if I'm watching another chart or things are moving too fast and I don't have the time to do that, I just sell at the market. So that's where you would place your order, okay? Because market has come down, has pulled back, and you say, well, if we start to sell off again, I'm not going to wait to get up here. If we start to sell off again, I'll get into the market. Now, what happens sometimes is that tail may have follow through buying. Then you will have another candle coming up here. It might just bounce off the EMA, or it might actually get to the apex. So all you then need to do, or all that I do then rather is, if that happens, is I will then just follow the lows of the candles up and put in my order beneath that, still anticipating a follow through. So here you have been triggered, you're getting triggered on this candle. Okay. Again, remember, we're not selling beneath this candle. We're not getting triggered on this candle. We've seen the breakout. We're happy with this strength. We've seen the tail at the bottom. We're on our way to see if there's a pullback, but instead we get acceleration. And then there's a pullback. Now we say after the pullback, we want to jump into the market. And that's when we get triggered. Now, something else took place. So if you were in this market earlier on, and if you're able to interpret what was taking place or what took place, you would have comfortably taken that trade. Okay, another 5-minute candle is coming to a close. Let's have a look at our open trades. I'm not doing anything, not adding anything extra on the S&P 500. I really would like to see if we get follow through selling and then a pullback. Then I will be more inclined to look for follow through. I mean, for adding on. I'm already in 2 candles. I took one here. Okay, then I took the second one here. Now I'm just waiting. So I'm not adding anything there. German 30, that's the first pullback. It's a decent enough pullback. So I want to see what the risk size is for that. 60, just above my risk parameters. So my maximum risk on German 30 is $60. So I'll have to wait for the breakout, see if we can take out this low and a pullback where I'll be able to put a stop here. Or even if we go sideways, I want to see if the market creates some kind of a trading range, and if we break out beneath it, I can put my stop above that. So I'm not going to take that because the only place to put my stop is way up here, and that's above my risk parameters. Okay, so now this is depending how your time zone and where you trade. If you come into the market and you're looking to trade the open, you want to trade the open of the Hang Seng, which is so it's 3:15 my time, 9:15 Sing. And if you want to trade that, it's very useful. In fact, for any market that you're trading the Asian Open, it's very useful. I find it extremely useful just to look to the left. What happened within the US session? Okay, and sometimes there is nothing distinct that has taken place, in which case you don't worry about it, don't bother about it. But when you looked at this, you said, hang on a second, the market created, if I just try and connect the highs, so there are these descending highs, and I connect the lows, the market formed a huge converging wedge at the end of US sessions. I mean, even if we were to extend these into this session, into the Asian session this morning, you kind of know at some point it's going to be a breakout. There's no ways the market is just going to keep on doing a tight trading range and carry on a single line. So you'd have seen that. And then with your analysis of the opening, you see another another converging triangle. Then you know we have a nested pattern. Okay, converging triangle within a larger converging triangle. And whenever you have these kind of nested patterns within patterns, that's a strong breakout mode. So you really have to find ways to jump into the market. Now, let's just flip over, 2 minutes to go. Still not, might just accelerate down. It is fine. I'll wait for a pullback to test the 10 EMA. I'm just nothing distinct for me there. The reason I'm saying that, we had the pull inside candle. Bears tried to break beneath it and they failed. So that candle tells me that there's a higher probability that the bulls might still try and break out, maybe create a micro double top here or a double top there. So it's worthwhile to wait. Now, the good thing about waiting, initially when I was looking to take a trade, my stop is up here. But if we do get a bear breakout and a pullback and a reversal, then I don't have to put my stop up there. My stop will be here to be a much tighter stop. So waiting is still worthwhile. If we accelerate up and we create a double top, then that still is the stop. Interesting enough, if you look at that high and that low, if the market was to accelerate up and give us to go up and give us a double top there, you would need to say to yourself, what is the measured move? And that's where the measured move is, which is just above, or probably the same place where you'd be putting your stop. So best to wait. So if you didn't take that trade because you can like, hey, George, I mean, Now I understand what you're saying, but when the market was unfolding, I would not have understood that. Then don't take that trade. Wait for the next opportunity. And that is perfectly fine. So the next opportunity would have been here. And they said, oh, okay, now I kind of see maybe I should have put it there underneath that, but I missed it and that's perfectly fine. Oops, sorry. There is the next place you can put your stop. I mean, you can put your stop order in the market. You can legitimately put it there. Now, if you put it there, remember, you would have seen and said, hey, maybe this was a pullback. Maybe that's where I should have put my stop. The fact that we had a pullback here, now you don't have to put your stop up here. It has to go just above this pullback. So let's just mark it in line. Okay, so the stop for that would be above there. Just in case you want to be watching this video again at some point. Or if you can only watch the videos. And then stop for here would be above there. Now, although we are having all these pullbacks, you have to clearly continue to ask yourself, well, what is happening in terms of a potential trend? Do we have a trend here? Is there anything that's setting up for us? You will see one of the key considerations in a bear trend is lower highs. Okay, lower lows are important, but lower highs are the most critical thing. So in all of this, the market has been putting lower highs, lower highs, lower highs. So we are, in spite of the tails and the pullback, we are in a strong bear trend. As long as we are in that strong bear trend, you have to keep thinking, well, what can happen next? Now, the problem that the bears have is this. Okay, yes, if you look at the lower highs, look at the bodies, there is not a single case where the market is going above the previous high. So yes, the market is breaking. It's going down, strong bear trend. Now we get to this red line, which is the low of yesterday. And the bears need to break out beneath it for us to say, hey, the bears have taken control of this particular market. Instead, we get a tail at the bottom. That's a failed breakout right there. And you say to yourself, oops, I took a trade here, and now the bears have had a failed breakout. I'm not prepared to hold on to my trade for long. So what you got to do, don't close your trade, is tighten your stop. So from that first stop, you can legitimately trail your stop to here. Okay, we've got like a minute to go. We'll have a look at the trades and see what's happening. So it can, because of this tail, you can tighten your stop up to the high of this candle. One of the things, when I talk to traders, some guys say, hey, George, that's a failed breakout right here. I want to just close my trade. I don't want to risk it. Well, you got to train yourself to put your stop in the correct place. And this is where the waiting for the setup to come is, because that really avoids you from just moving your stop randomly. But if you're inclined for whatever reason, and that's perfectly fine to say, listen, I'm closing my trade. Rather, and that's a big capital RATHER and underline and bold and all of those things. Rather pull your stop to break even, okay, for that trade. And the reason I'm saying rather capitalist underline bold, I don't like moving a stop to break even unless there is justification for doing so. Unless that break even is now a technical level. Okay. Here, when you've put it a break even, it's not a technical level. If the market is trying to test something, there's no reason they're going to come here and say, well, that's a valid position. It's a breakout point, yes, but the market has been selling off and has been giving breakout points altogether. That level would have been fine, breakout point, that level, high of the pullback would be fine, the high of the candle would have been fine. But if you're inclined to close your trade before it's worked out fully, rather put a break even and then just wait and see what happens. You get a follow-through candle, again, not a very good candle. Okay, big sell-offs. Now you're saying the bears are strong. They should have just carried on selling this thing. But, as George said, I'm just going to bite my fingers and I'll put my stop here. So now, instead of just closing the trade, you are at some level of technical, like the high of these candles, just above the high, just above the low of yesterday. So the low of yesterday is a very strong level of, it was supports. That's why the bulls were struggling. The bears were struggling. Now it's resistance. And if the bulls are strong, they get above resistance, then you can get stopped out. If the bears are strong, they want to defend that level. We'll come back to this. Let's have a quick look. We just gone past top of the hour. Nothing happening with our S&P 500. Same here, UK 100, we're waiting. German 30 is testing the 10 EMA, dodgy candle. That's a 1 bar trading range. You don't want to sell beneath it or above it. We have to wait to see if we get a breakout pullback or we go sideways. The market might go sideways, might go up, to try and test these lows. So that's perfectly fine. You just have to hold on to the trade, anticipating that there'll be a lot more selling off later. Let's see Hang Seng 50. Again, we might just get bears breaking out. But one of the reasons I didn't take the trade, because I clearly could see that there's a very low probability of us selling off until, the bulls give up in this area, and they'll give up with a double top. So the bulls would give up. Let me just move that and talk about how the bulls would give up. Not high, that low. The bulls would give up the fight here if they went up and with a double top here, or with a double top here and the market turned down again. They would have tried once, twice, 3 times, like a wedge top, and then the bulls would give up and they would be selling. Or if we had one strong bear candle closing beneath these lows and those lows, then we know, okay, the bears have taken control of the market, then the bulls would give up, then you can just look to jump into the market at that particular stage. So until we get that, it's one of those which we have time on our hands, so we'll continue to just watch it. Okay, so then we had, at this stage, you're hoping to see bears selling off and a pullback, but instead, tails on top. We have a trading range, but now when you look at it, as it's forming, you're not quite sure. You don't want to sell. You don't want to say that's a low one, that's a bull candle, there's tails. You don't want to do that. You see a huge bear candle, and yes, that's closing beneath these lows, but it's an entry candle after a bull candle. So that's not a good entry for the bears. This was a bear candle, like we had here. Bear candle, that's a very strong sell-off continuation. So you don't want to sell beneath here, you just have to wait. But as you look at it, you say, but hang on, we are creating a converging triangle here. If I connect that top, I get a macro double top. I connect that next top. By the time I connect to the third one, I'm saying, but that's interesting. So we've got some lower highs here, and at the bottom, we've got some higher lows. And if I extend that line, there is a converging pattern here. Then I see a bear candle. That's testing the moving average. Now, this, when you see this, you don't want to jump into that. You want to wait to see if you get a pullback. So we do get the breakout. Then we get the pullback into the apex on the very next candle. And that's what you want to see. Then we see, there's continuation, breakout, pullback. Market is closed beneath that failed breakout. Very good. So we had the signal, inside pattern. Inside is a breakout candle, in a breakout pattern in a converging triangle, because we're expecting the market to break out at some point. Breakout, failed breakout into the apex, good. Follow through, excellent, closing beneath the low. So that's another trade you could take. Now, if you're taking that trade, then that stop that you have is a legitimate place for that stop, for the stop for that trade. So our stop would be, so it's above the converging triangle. But whenever you have any pattern, any technical level where you want to put your stop, and the nearest, there's another technical level that seems stronger, that's where you must put it. So that's nearest technical level for us, which is the low of yesterday. So you're selling beneath that. Now, why would you continue selling here? The reason you continue selling there is you have seen, you've got a measured move here. There is a breakout point. Okay, the nearest breakout point. So there's a breakout. We broke out beneath the last candle. And if we look at all the bear bodies, right up to the failed breakout, okay, so it should be a little bit lower. So up to that level, until we have a pullback where the high of the previous candle is broken. All through here, in the breakout level, we haven't had that kind of a pullback. So at that point, there is all of this is what you consider the breakout part of this move. So if the bears are strong, after any breakout, will be leg one, and there is a pullback. So we don't know what kind of pullback we'll get, but here we got this pullback in terms of this expanding triangle. So when you're selling, your hope is that the market gets to this level, which is a measured move. That high, that's a measured move. And that's also testing the low of May 2022. Okay. Then, you get all of this and the market starts to turn. And when it does that, leg one, leg two, and it turns, you can close your trades anywhere here. That is perfectly fine, because the move is complete. Leg one, pull back, leg two, it is complete. You can see market is reversing, it's closing. So you can close anywhere. And also, you get into the close of the first session of the Asian markets. That's when you get into that, you can legitimately close all of your trades. Then you just wait and see. Now, this is at the open. This is one of the things that you need to pay particular attention to. So this market closed here. If you look down here, that was the last candle. Then it gapped up. You never know. I mean, irrespective of how strong a pattern has, you absolutely never know. It's like news. You know, we close here, we could gap down on the open and then just carry on selling. But we gapped up, and then there was a doji. So although the bulls managed to gap up from the close to here, tried to close above the moving average, and they have not been successful. They were not successful with that close, with that first candle. So created a doji inside candle. So you know the bears are still strong. You know, this candle tested that pullback, tested that low, but you don't need to jump in. Just like news again, the first candle of any session I treat like news, so I don't jump in. 95% of the times I don't jump in. I wait to see if, for example, you know, this had been a strong reversal candle on the open and reversed the whole gap up and closed beneath here. It's one of those 5%. I'll say I'm going to take it and I'll put my stop in the correct level and see what happens. But since then, subsequent to that, we had just try and visualize all my lines on the 5 minute because put so many lines on to affect my view of the daily. So higher low double top, that's a trade that you could take, but if you take that, stop has to be above that high, which is directly above that, but that's a second entry that you can take. Second entry to the open, first entry, second entry. So you can take that trade and see if we can be able to mark all of them in before we have to go. Okay. So yeah, your anticipation expectation is that market will sell off, pull back, and continue to sell. But on this failure, when you see that we fail to break beneath this, you got a choice. Leave your trade there if you want to hold it, and you can legitimately do so, or you can exit. Okay, strong reversal, you can exit, and that exit is just at break even. So you could exit there. Wouldn't take that trade if you'd miss that. You know, you need a reasonably visible bear reversal candle for you to jump in and say, hey, I'm going to take that trade. Next opportunity for you in this market. Now, guys, you know, when I show all these trades, by all means, do not take, you don't have to take all the trades. You just need to take one or two trades. This is just showing what's set up for us. And, you know, now, after that, that's my third. So I could have taken that first entry, no, second entry, failed breakout above a double top. 1, 2, 3. That's a wedge top that you could trade. Now, the problem with this is that this is the open of the UK markets. Now, if you trade the open, best to wait for at least 3 candles. Okay. And you would need a measured move because that's trading like trading the news. So if it was just a normal trade, wedge top, you can put your stop there. we're right on time. So I'm going to just quickly have a look. Okay, so here we're still looking to go short. Want to see if we get a double top, and then we can take it off there, and our stop would be above there. Kind of run out of time, guys, but market is pretty interesting at the moment. Some trades in the market, which we'll keep watching. Marlon, thank you very much for hosting the webinar for us. We'll catch up with you guys next week.